Alright, we see a very strong reaction today with the main indices flying and many stocks are maintaining their uptrends as well. Apparently, the market is just unstoppable. So let's see what to expect next and analyze what the market's main turning points are. Always observing the technical evidence because here on this channel you receive unbiased analysis every single day. Welcome to the Finance Hydra channel. My name is Nathan. It's a pleasure to see you guys over here. And yes, we see a very impressive reaction here on SPY, which occurred essentially in the last few minutes, right? Because we are exploding, making a very nice bullish candlestick pattern over here, closing at a record high. All right, I mean, we did an all-time high last week, but we are closing at a record high today, making a very nice bullish reaction, rejecting any possibility of a bottom signal right here, right now. I'm so sorry, I said bottom signal, right? Top signal right here, right now. If we see a top signal, okay, a pullback to the 21-day EMA, the exponential moving average, or to the 565 would be totally normal, expected, even desirable, because always buy near support levels while we are in a bull trend, right? So that would be okay, but right now this reaction rejects the possibility of a top signal in this area for now. The QQQ is also making another very good bullish reaction. It did a sharper correction, alright, right below the $493 after closing this gap over here, which we were observing very closely here in this channel. By the way, this gap over here was closed. Right now, we are making a pullback to our next support level, 484, which was a previous resistance level multiple times over here. 1, 2, 3, 4, 5, 6 times. Right now, it is acting as a support level. Classic example of the principle of polarity in technical analysis. Previous resistance levels are going to work as future support levels and vice versa. Right now, meaningful bullish reaction above a support level. This is very good. What the QQQ is doing right now just reinforces the bullish momentum, which is still incredibly strong. What's more, even if we see a sharper correction, even if we see the QQQ losing the 484 support level, we have two other very strong support levels on the QQQ, the 21-day EMA and the 476, the previous top level over here, acting as a double support level right now. So we are maintaining an incredibly strong uptrend over here. There is not a single meaningful bearish reaction suggesting that we are gonna trigger a sharper correction to our next support levels. Meanwhile, what's more, what we see over here is a classic hammer candlestick pattern, which is a quite reliable bullish candlestick pattern to work with. I mean, this pattern over here has, from a statistical point of view, roughly 60% chances of reversing the bearish bias. So we have a decent chance of maintaining the bullish bias, mid-term speaking, reversing the short-term bearish bias. Of course, I described this pattern over here on our ebook on technical analysis, which is totally free for you to download. Here you will see how to trade a hammer. Here you will learn how to trade candlestick and chart patterns correctly, always observing technical evidence, and there is a bonus chapter on risk management over here. Therefore, I really advise you to download this ebook, which again is totally free on our Telegram channel. Just take a look at our website, link in the video's description. All right, classic hammer, interesting bullish signal. Let's see how it's going to behave next. As long as we stay above 484, great, the bullish bias will persist. Nvidia is also making another very good meaningful bullish reaction above the 21-day EMA, the exponential moving average. All right, it is looking very good. It is maintaining the bullish bias. What's more, Nvidia is trying to materialize higher highs, higher lows. Nathan, what if Nvidia loses the loses this 21-day EMA tomorrow, losing today's low as well, then okay, it is going to reject this bullish signal over here. Probably in this scenario, the QQQ would also reject our hammer candlestick pattern. After all, hammers work 60% of the time, not 100% of the time. So we gotta observe how our stocks and the QQQ, especially the QQQ, because this one is our main tech stocks gauge, right? So as long as we stay above our short-term and the mid-term support levels, we are gonna maintain the bullish bias. If we lose our support levels, we are gonna trigger a sharper correction, potentially reversing the mid-term bullish bias. If Nvidia rejects this bullish reaction, all right, the 113 is gonna be our next technical support level. If we lose the 113, there is no other meaningful support level other than the $100 down here. So that would be a quite problematic situation for Nvidia. Therefore, let's observe. For now, let's observe how Nvidia is going to behave above this moving average over here. Now, this one, the Tesla, all right. Tesla is almost by a few cents, all right, by a few cents, it almost hit our target at 265.13. All right, this key point over here, this major resistance level is Tesla's nemesis over here, because we have been talking about this key point for months right now, even before Tesla reached this key point over here on May this year. All right, we have been talking about the 265, which is the most dangerous resistance level for Tesla. Right now, we are back at this key point again. So as far as I know, if we see a top signal below this key point, it could be particularly dangerous because it is a meaningful resistance level. Tesla is right now quite far away from our support level, so we could see a sharper correction ahead. What's the problem? The problem is that a bearish thesis is not gonna materialize that easy because we gotta lose many support levels. Tesla is right now in a mid-term uptrend. We are still bullish. In order to materialize a real, very dangerous bearish reversal chart structure, long-term speaking, we gotta lose all of our main support levels on the daily chart, namely the 245, the previous gap resistance level, the 21-day EMA over here, a dynamic support level. We gotta lose the $233, the previous major resistance level that acted as a resistance level 1, 2, 3, 4, 5, 6, 7 times in the past. In addition, we gotta lose this purple trend line over here, which connects the previous bottom levels since August this year. Therefore, we gotta lose 4 major support levels in order to materialize a sharper correction on the weekly chart. Only then we're gonna make a very dangerous bearish reaction. As far as I know, as long as we stay in this bull trend, as long as we maintain the bullish bias, any pullback to one of our support levels could be just another buying opportunity. Buy when we are in an uptrend near a support level. Why? Because the risk-reward ratio is optimized near a support level. What if we are in a bear trend? Then sell near resistance levels. Buy near support levels, all right? The idea is still pretty much the same, all right? Always follow the technical key points on our charts. AMD is quite interesting because AMD looks more like the QQQ than Nvidia. For instance, Nvidia here is already at a support level, making a bullish reaction above the 21-day EMA. The QQQ is stabilizing its price above the previous resistance level, just like AMD, stabilizing its price above the previous resistance level, 162, the main resistance level on August this year, and again on September 25, 5 days ago. Right now, guess what? This key point is acting as a support level for us, following the principle of polarity in technical analysis. Previous resistance levels are gonna work as future support levels and vice versa. Now, only by losing the 162, we're gonna trigger a sharper correction, possibly to the 21-day EMA. Palantir is also stabilizing its price. However, this one is incredibly, insanely bullish. As far as I know, we are making a sideways correction, aka time correction. We are, instead of actually dropping to meet our support levels, we are waiting for the 21-day EMA to meet the price over here, all right? So this is a classic time correction, not a price correction, a sideways correction, all right? Now, if we see a meaningful bullish reaction above the 21-day EMA, that's going to be fantastic. By losing the 21-day EMA, Palantir's next stop is going to be $33.13, the previous top level, which is acting as a support level right now. All right, it's a very simple situation. As long as you stay above this moving average, the bullish bias will persist despite of this congestion over here seen in the past few days. All right, so as far as I know, the situation is still pretty much under control. We still see our stocks, we still see our indices maintaining their bullish bias, trading above their critical support levels. From now on, we should wait and see how they're gonna behave around their critical inflection points, and I'm gonna be here to keep you guys updated every single day. So again, in this channel, you'll find unbiased analysis every single day. So if you wanna see how the market moves, if you wanna keep in touch with my personal insights, well, subscribe. Click the like button to support me as well. And remember, download your free ebook on technical analysis written by me, containing my personal trading strategies over there. You can learn how to boost your performance in theory and in practice with us. So just take a look at our website, link in the video's description. Thank you very much for your audience, my dear friends. Stay safe. See you guys tomorrow.